The inverted yield curve gained popularity by its ability to predict recessions. Now in this video, I'm going to be taking a look at how stocks performed after the yield curve departed inversion. Now currently, we're 62% above where we were at when we departed inversion. We're currently in month 13, so that's April of 2021. But you can see in green for the inversion of 2006, we dropped as much as 52%. And that was after around 20 months of departing inversion. And then you can see in yellow, we dropped 37%. And that was in about the 20-month range as well. And then you can see in red, we only dropped about 7%, and that was by month 11. So I was a little bit less, but we still had a yield curve inversion. And then in blue, for the inversion of 1980, we dropped a total of 28% from the high to the low. So at the high, we were at 22%, and at the low, we were at negative 6%. So that was a 28% drop from the high to the low. And that was around month 25. So this can kind of give us an idea of how the stocks performed in a rising Treasury yield environment. And currently, there seems to be a big gap between how we're currently performing and how stocks have performed in the past when Treasury yields were rising. Now you can see here, I have the inversion of 1989, 2000, 2006, and 2019 up, and you can see in green where we're currently at. This is after departing inversion, and this is how the inverted yield curve has been performing over that period of time. So you can see in green we're at 1.67, and it's possible that we can reach 3% on the 10-year Treasury yield by the time we reach month 30, because that's how it's been operating in the past. And to give you an idea, we would reach month 30 by October of 2022. So it appears right now Treasury yields are on the rise, and that's how it's occurred in the past. So I think that's important in trying to gauge how stocks will perform in the future based off that. Now, if you're curious why we're up so much on the stock in the stock market versus previous time periods, this might have something to do with it. It's the M1 money stock. In 2020, we're at about 4 trillion, and currently we're at 18 trillion. Based off this chart, we added $14 trillion to the money supply in a 2-year span. You can just see the level in which we're currently at above 60% and where we were at in the past. And by this point, we didn't breach the 25% mark. So we're really getting into what I believe to be overvalued territory based off past trends.